So I'm just very curious to see, this is just a leak at this stage. There's no binding deal on the table, although the rumour is DD is underway. But if it actually translates to an agreed deal, I'm super interested to see if there's, more of this, and is this a way that they can recycle some capital and endure?
Righto, buddy miners, we'll give gold a rest today. It's a bit of lithium. The Indians want in on lithium. We've got Larvotto, the small cap that's now in the All Ords, and we've also got a bit of Adriatic, a corporate update. And you want a corporate update at Underground Operators next week from the Sandvik team, their bloody tent, and hopefully Derek Herb will be there talking everything Sandvik ground support.
Tell me about the ground support,
mate. I cannot wait to just stand in front of that booth, whether they want me there or not.
I can't wait. I can't wait for that. I can't wait to just hear about the innovation that they've got underway, mate.
It's going to be selfies coming everywhere, mate. I want to see their new dynamic bolt. I'm sure that's going to be showcased at the conference. Bloody just an old school split set I can walk around with, fending off fans with.
Don't forget the chemical innovation, mate. There's a whole bunch of different products coming out that aren't even bolts.
Well, you won't even. They've probably got resin there, but you won't even know it because you can't smell it.
Amazing.
I'm jealous you get to see the €1 billion man, mate. Enjoy it.
And the free set and the free ground support division that come with him. Right, let's take it away. The Indian groups that want in on lithium, and notably Australian lithium.
This is a story broke in Reuters a few days ago, and their intel or insight was that a consortium of 4 Indian state firms, they're looking to collectively acquire a 20% stake in SQM Australia's lithium assets, being their 30% stake in Andover and their 50% stake in Mount Holland. The article kind of goes on to say that due diligence is on, and the companies have expressed their interest with an initial offer, and the number that's quoted here is $600 million US. Right, this is interesting for a bunch of reasons, but the thing I wanted to focus on for our discussion today is actually just valuation, because if there's a decent see-through value on the table here, that has some pretty big flow-on effects for not just SQM, but other WA lithium hard rock players at the moment too.
Yeah, and considering what was paid for Andover, what the bid was for Kathleen Valley back in the day, and $600 million to wrap up all those stakes, I'd like to see what you come up with here.
Yeah, so this is look, US $600 million is roughly 950 million Australian dollars. So that'd imply a valuation, if you multiply that by 5, because they only want a 20% stake, so that would imply a valuation of 4.75 billion Australian dollars for SQM's kind of entire Lithium Australia business of those 2 assets. So I am keen to kind of contextualise this here, because just think about 18 months ago, Azure was gobbled up by Gina and SQM together for what was a fully diluted equity value of 1.62 billion Australian dollars. That implied that SQM's share of Andover would be worth 810 million divided by 2, right? And 20% of SQM's share, which is what the Indians would effectively be buying as part of it, would be worth a fifth of that, or 162 million Australian dollars.
And that's for 60% of the project, because Creasy's still got the 40.
Correct. So that's effective. That's that number that I've deduced there is SQM. They're going to have 30%, but a fifth of that is what the Indians would effectively be buying. So I'm trying to contextualize that 162, and then trying to figure out, okay, so what's the Mount Holland value here? And really frustratingly, analysts that cover SQM, they don't value its mining assets on a sum of the parts basis. They don't do DCFs on it. They group the lithium segment and they apply this chemicals multiple on EBITDA, which is really frustrating. So, I just wanted to see what the street was valuing Mount Holland at. And of course, you just get clueless when you're looking at the analyst coverage. So I went to Wesfarmers, and same thing. Good luck finding a single NAV estimate of Mount Holland by reading Wesley's analyst coverage. It's a big conglomerate.
It doesn't quite cut the mustard with Bunnings, does it?
No. So the closest you'll find, you can see JP Morgan estimating ramp up of Mount Holland to take 12 months longer than the planned 18-month management target. And on their numbers, Mount Holland isn't EBIT positive until FY27. Flash up a chart here. So I looked through Wesley's annual reports, and I was just trying to see how much money like they and SQM have sunk into building the mine. And by reading a bunch of the statements and everything, like in the last few statements specifically, they've constantly brought up a potential impairment on Mount Holland if their assumptions on the lithium market aren't accurate, but they're yet to actually impair it. But yeah, I kept kind of trawling through and trying to pick up a bit of a ballpark number of what at least the carrying value of Mount Holland is. And so Wesies, they paid 776 million for their 50% of that project when they acquired Kidman in 2019, and since then they've sunk ballpark 1.5 billion Australian into building their share of the mine and the refinery. So assume SQM's 50% has kind of the same carrying value. That'd be 2.3 billion all up in Australian dollars. Hence, if you want to get 20% of that, which is the read-through on what the Indians would be acquiring here, 20% of 2.3 billion is 450 million Australian dollars. So all in all, 450 million for the Mount Holland minority interest, and plus 160 million for the Andover minority interest equals 610 million Australian dollars. That's kind of rough math, kind of carrying value of those two assets as I interpret it. And remember, the Reuters rumor said 600 million US or 950 million Australian. So on my very rough bush math, this Indian offer, if the numbers right, would be a pretty attractive premium to the sunk capital or the carrying value of these assets. And remember, like, the Andover deal was done during Lithmania. Like, no way would that same deal go through for the same price that it did 18 months ago, like it did. And Kathleen Valley, Mount Holland, it's not profitable at the moment. So you kind of, this offer from the Indians, if the value is right, yada yada, then there's a pretty healthy deal on the table. Of course, the Indian consortium, they're going to want the product and marketing rights that comes with their respective ownership percentage. But yeah, and the other thing about the Reuters article, it makes no mention of Kwinana, and so I don't know if the interest kind of covers that any respective share of covalence hydroxide facility which is being built and commissioned there. But if the value is true, like, it's a massive kind of vote of confidence in the value of WA hard rock assets, which are really in the doldrum right now.
Yeah, absolutely. It's huge. I mean, just to go on from what you said there, I would assume, given the way the article is written and stuff, and it's pretty early days and everything, but the way it kind of sounds is that they're after that stake in Covalent, which is the same entity that owns the Mount Holland stake and the refinery as well. And given everything that's happened since those transactions, and the way you're talking about it being a carrying value, you're not really taking into account that everyone else that has tried to go downstream hasn't had too much success in WA. So those numbers, and like you said, super early days, are a lot higher than I would have suspected.
Totally. Think about MinRes right now. Like, if they could sell down a 20% stake of their West Australian lithium hard rock business to an Indian group for when these are the kind of numbers on the table, that'd be a huge win for them if the equivalent kind of deal is on the table. The Reuters leak doesn't say it's on the table, but heck, if I was at MinRes, I'd be doing everything I could to try and try and get an equivalent deal on the table for me.
Even a 50% premium on all their minority interests collectively, I'd reckon they'd take that.
Oh yeah, totally. It's and we kind of see similar stuff whenever there's these minority sell downs of the big kind of copper assets. There's strategic entities who have a strategic interest, and they've got a much different kind of cost of capital and are willing to buy a minority interest for a much higher implied valuation than the market is giving that company kind of credit for at that point in time, which can really assist any cash flow dynamics that the companies might be having. So I'm just very curious to see. This is just a leak at this stage. There's no binding deal on the table, although the rumor is DD is underway. But if it actually translates to an agreed deal, I'm super interested to see if there's more of this, and also if if any of the lithium producers out there who are either having kind of cash flow challenges or are forecast to have cash flow challenges, like, is this a way that they can recycle some capital and endure the storm?
I think, and if you go back to that Andover sale, like the so-called Lithmania, it was majority of that was driven by, M&A hype, speculation, not speculation, but like M&A activity, like the underlying lithium price had dropped a shitload from the highs, but it was all just everyone trying to, the rush to get ground. Something like this, which could, potentially create a bit of momentum in that, is like, you just seen what happened in lithium previously, purely dictated by M&A, not the actual price. So whether this might get the ball rolling again for that, price irrelevant, we're about to find out. But they might be all licking their lips a bit, the old lith bulls. What are they called?
And
the lith bag holders, should say.
Just to add to the broader point, I think action we've seen from Indian groups around the world is really interesting, and that's a trend that I think continues. Australia's not the first spot they've looked. They've tried to tie up deals in Argentina, in Chile as well, even in Africa, in the DRC in particular. They're trying to do more deals. India is a huge component of a lot of analysts' growth, global GDP growth and these sorts of things over the longer term. So to see them start to kind of mimic what China did 20 plus years ago is an interesting kind of different take on what they're doing here.
What's your prediction? Do you think
I just watch
you reckon it's going to come through, or what is it going to be get the ball? Is it going to start a bit of momentum, or it's probably the first thing of recent times that we've seen anything related to strategic investment in Australian lithium of late?
Yeah, it would be. I think it's just wait and see, because you can't get the vote of confidence until this is a binding deal on the table, and then all of a sudden maybe you can extrapolate to the other producers and back out a see-through value, which is on their lithium portfolios, which is either more attractive than the market is appreciating, or in line. And if they just have a pathway to actually unlock some of that capital and avoid kind of short-term funding squeeze because of market conditions, that'd be awesome. But we've got no indication whether this deal is going to be binding, or if it's going to lead to future deals as well. Yeah.
What do you reckon is going to happen? You go, JD.
Just to your point on strategic investment, the only other party that would have been keen lately is the Chinese, and there's just no way that was going to happen in Australia. So, yeah.
I'll be interested to see what happens with Christie's 40% stake in Andover at whatever point, if things do start heating up, because that's unless he just keeps it forever. But you think that'd be a bit of a hot avenue that mobs like this would be going after.
Yeah, especially when it comes to CapEx time. That's when we might see something on that front.
He's like, I don't want to pay all that.
Yeah, well, he doesn't have to pay. Remember, his stake, he doesn't have to pay at all for any of the drill out of the resource, all of the work until that decision to mine is made. So his kind of value is getting added to that project in the interim, and he gets the benefit of that without selling his stake.
Yep.
Yeah.
Cruising.
Oh, well, let's head to good old New South Wales. God, it's funny how this probably could come in as one of your best value deals going around, JD, because once I put those numbers out, you'll bloody fall off your chair. So, as you said, Larvotto, you look at the price here, they're nearly, I think they're $400 million market cap now. And I still remember them it was in Lithmania. Larvotto were drilling for bugger all down in the Dundas region, I think, down in the south of WA. They were just a lithium exploration company. And they've done a deal, and I'll go through the numbers. They pretty much paid $8 million for this Hillgrove antimony gold mine in New South Wales, and now the company's worth 400 mil. But we'll go through the thing. So antimony, it wasn't it touted as the best performing commodity last year?
It had an absolute ripping year last year, correct? Yep. Yeah. Previously been a drag for people that have been attracted to it. It's even had the nickname anti-money before, but yeah, Larvotto's turned that around.
Yeah. Well, I think I think when they bought it, it was well sub of 10,000 US a ton for antimony, and now it's $40,000 US ton. It's not the easiest commodity to find a price chart for, I won't lie, but it's gone up a bloody shitload. And I guess it was on the back of early December last year was when China banned the export of antimony to the US, which is what really gave it the bloody momentum to where it is now. Now everyone's drilling for antimony. So this was actually the first. I did VAC work there in 2009 at uni when Straits Resources held it, and Straits had just put it effectively. It wasn't full care and maintenance, but it went from when I got there was just a skeleton crew on still pushing a decline. Wasn't any production. They just retrenched heap of people. Like,
did they call it a gold mine back then?
No, it was always known as one of the. It was a gold antimony mine.
Gotcha.
Yeah, and it was always one of the only ones in Australia. The other one's Costerfield, which is Mandalay Resources down in Victoria. So they've what are their reserves? They've got about 10,500 tonnes of antimony. You see the reserves of Hillgrove that they've got at the moment. They've got about 39,000 tonne of antimony with a bit pretty similar. Grade's a bit lower, but it's I think Fosterville produces antimony as a byproduct. You've got the other ones that Southern Cross Gold that's been the bolter. That's they haven't got a reserve out or anything. That's going to be an interesting one to wrap a reserve around with all the bloody veins going everywhere. That's 0.9% antimony on their exploration target. So, but I think this, Hillgrove's set to in their study. If they hit the numbers, that's going to supply 9% of the world's antimony. So it shows it's not a big bloody. It's a market that's controlled by, you guessed it, China. 80% of the world's antimony comes out of China. So, they acquired this project, and it was sort of before antimony. The price hadn't moved yet as much as it did now, and they acquired it for $8 million. So $3 million purchase price plus $5 million for replacement of government bonds, and it come out of Red River. So Red River went into administration based due to their Thalanga copper project up in Queensland. Yeah. And you see that there was shares issued in the transaction. Shares were issued to Trafigura, $2.5 million at 0.07 cents in Larvotto, which is now $1. So they were one of the creditors for Red River, and then they agreed to convert some of the debt into shares in Larvotto.
Hope they still got them.
Which I'm pretty sure they do. I couldn't see. It's all. Do they trade? I'll see. There's like one of the substantial holders, like Bank of Nova Scotia. Would Trafigura be under that? I couldn't. It was the first time I looked at it today, so bear with me. And like another, there was the cornerstone investor that come in for 20% of Larvotto was Gauge Capital Management of Beijing. So it's like a sort of a Chinese major holder. I think they're back at about 15 and a bit % now holder of Larvotto. And it was, and you look at what, like Straits Resources. So Straits actually effectively became Aeris. So they actually sold it to Bracken in 2013 for $27.5 million. So these guys have picked it up for effectively $8 million plus the Trafigura shares they issued. And it's just, talk about perfect timing for, as I said, the antimony price is effectively 5x'd. And that's how they've bloody ended up with it. So and you look at the commodity when they did the actual project study, the ore reserve and the PFS, it was based on spot price of $23.50. This was spot at the time, US $23.50 for gold and $23,000 a tonne for antimony. So fast forward to today, gold is nearly 3,100 US as of the other night, and antimony's 40,000 US. So it's just phenomenal bloody rise. So you can sort of see why it's getting this attraction. So, and look, they were touting about 88 million pre-production capex. They ended up raising $30 million at the end of last year. So the joys of the big market cap. So they've got about 28 left in the bank. So I guess thinking. Yeah, so because there's existing operation there. It's funny, like when you go from camp, you go down this road through this gorge and then back up over to the mines on the other side of this gorge to where all the processing and offices are. Because it was like a little pilot plant. It's only like a 250,000 ton mill that was there. It wasn't a huge one, and then so they're looking to expand it to 500,000 tonne per annum, but obviously we're in New South Wales here. We're in farmland. We've just seen, not putting a bloody knocker on it, but we've seen, I guess, what happened with the whole McPhillamys side of things. We're in a much different. It's not a mining town at all, Armidale. It's about 100 odd k's from the bloody Sapphire City, Inverell, my hometown.
It's a beautiful part of the world.
Yeah, but it's not you don't go around and see West Track buildings and stuff everywhere, and like it's just not a mining area. I remember when I was there, because they got a heap of old school fellas in from North Queensland to come and start the mine as the superintendents and that, and they said they like to employ a local workforce there because they employed them as owner operator. Like they had to teach all these people how to mine, like teach them how to put poly together, like because no one had ever seen it before. There was obviously people that had mined before that they recruited, but it's it's a totally different landscape to over here. I didn't even know it existed till I went to uni, and it was only bloody an hour and a half away.
Wow.
So because if you look at I think this was in their DFS or something, like talking about the development application, because there was the development application that was, I guess you'd say the development permit that was in place before was for a 250,000 tonne of ore per annum operation, and that was like effectively expiring in December 2023. So they're talking about increasing it to 500 and 550. They're talking about the increasing the tailings capacity. So that is all part of a new sort of development application. They did just release in February this year that they've converted it from like a wet tailings storage to a dry tailings storage option. So that's I'm pretty sure it costs more. Like what I've been told about dry stack tailings is you only do it if you have to. Because it's a lot more like machinery involved to stack the tailings. You're not just bloody pissing it through bloody pipes out into a dam. So you could say that's probably a measure taken to get the New South Wales permitting a bit on side. So it looks like they still have to they will have to get approval to increase it to 500,000 tonne per annum. Like that's all been submitted to the regulators, but it's just that's probably the key risk that you associate with this is permitting in New South Wales. Beautiful country. It's fucking cold there. Oh, cold as a mother-in-law's kiss. It is freezing. -8 overnight. So take your bloody jumper if you want to bloody work there. So, and have a look at this. This is
if you want to work there.
If you want to work there, and there is a quite appropriate company I'll attach this one to. If you don't want to get a grounded camp, this is what you have to do. This is the only thing that is probably equivalent to a grounded camp. They've purchased the Echidna Gully, which looks like somewhere where they'd host weddings.
It is. It's an event space for hire.
Yeah. So they've purchased it for $3 million. So $3 million cash, an issue of 770,000 shares. So they've nearly paid the same for this block of land and accommodation village as they did for the asset when they first bought it, excluding the bonds. So this is the best non-grounded camp I've ever seen in my life. So
it's up there with the grounded camp. It's almost as good.
I cannot confirm that maybe grounded may have built this. I don't know. Like because it just looks like a grounded camp in country New South Wales. So,
Stunning. It's beautiful. I think grounded are probably going to have to add a bit of their capability here, because when I read it, the sleeping quarters, it's like 8 people in a room kind of thing. Now that won't fly on a FIFO camp, so still got to need grounded to get there and build some sleeping quarters.
Wouldn't be bad. Wouldn't be bad, but oh yeah, it's like a bloody school camp, isn't it? Oh, God, shut up, Matt. That was bloody transformational accommodation acquisition, you'd say. So that's so there's, if you want to go work there, that's what you got to look forward to. You might end up getting married on your days off, looking at that joint.
If antimony price falls off a cliff, maybe they can become an events company.
Yeah. So I think this probably, as I said, based on the other like that Southern Cross, or what is it, SX1 now that they're dual listed, like that hasn't even got a reserve or anything. That's still a long way away. This is an existing operation, needs a bit done to the mill, and they're doing a lot of, there's a lot more talk about exploration now, so you may as well get the bloody story going. But this would you got Costerfield as well, but in terms of near-term antimony production in Australia, this is probably it. This was always known as the antimony mine, like so, because that's been in, when was I there? 2009. It sort of I think it had a bit of a restart, then it dropped off, but it's just never had a seamless operation. So yeah, it's one of them ones that all looks good on paper, but I look at it with obviously just the New South Wales non-mining area side. It's one of those ones where you'd be like, right, get a contractor there, like get a New South Wales contractor, come mobilise the workforce, bring the bloody as many people with you as you can, because it's not a FIFO site, so you got to sort of bank on, you could make it FIFO, which is increase the cost, but you want to bank on trying to make it residential to save money. But you got to obviously find the people that have the mining experience. So there you go. There's the bloody history of sort of. You can play rugby league for the Armidale Rams if you want.
That's super interesting, Matty. So. The one area which is like a whole can of worms, but I'd be very curious. Obviously, you highlighted the China impact on the market there. These guys have a deal with Wogan Resources, kind of specialty metals traders.
British traders, aren't they?
Yeah, exactly. They do like mineral sands and all these kind of niche products and stuff. But I'd love to know what the payability is, what these kind of terms are, given that China is the one ultimately buying the vast majority of the stuff. Yeah. What you're actually getting paid for once you get it up.
And that's a life of mine binding offtake agreement too for all gold antimony concentrate. So marketing rights for it.
Yeah, the other thing I'd be curious about too is, like, we all know high prices cure high prices. Like, how reasonable is the current spot price of antimony to persist, and what new supply could be coming online around the globe?
But it looks like, you look at their study, it's probably one of those ones that reminds me of sort of Pilbara Minerals in a way, that it could operate at half the price. A spot price today, it appears, like if it was 20,000. So it's going to be a rush to get that, to be a first mover and take advantage while it is high. Because if this mine can produce 9% of global antimony, you don't need much more to come on to really start taking market share from you. Yeah. So I think they'll be trying to get stuff out as bloody quick as they can, at the mercy of the government.
Yeah, I mean, and on the processing point, right, if China's not exporting finished product, how keen are they going to be to buy antimony, right?
From the traders, it's all right.
They'll do what they can, but, if that's where all the downstream is to process the stuff, but they're not allowed by their government to export it, then what do you kind of do?
Yeah, we're talking about the permitting and stuff like that, like, if you compare, I know I mentioned McPhillamys before, but McPhillamys, purely greenfield site, that was all around tailings dams, and I know it was native title, but which was coincidentally where the tailings dam was supposed to go. This one is, if they're going dry stack, they've got an existing mine, existing infrastructure that just needs to be expanded in size. They've got a lot more in their favour than Regis had with McPhillamys, so not a really like for like comparison. But still needs a tick of approval. So
yeah. All righty, let's talk about Bosnia, Adriatic, I reckon, guys.
Haven't talked about them for a while, eh?
Yeah, it's been a good 6 weeks, I reckon. They I think we had a brief chat about them sort of off the top of my head 6-7 weeks ago when they did that capital raise for expansion in quotation marks. So they've come out now with an operations update as well as their annual report and an updated reserve and resource statement, and the stock's down 8%. So you can kind of tell that the market doesn't love it. And what the problems really are here, they're an evolution of what we spoke about last time. As we spoke, starting a year and a half ago about the mining challenges to start, Matty, the softer ground than anticipated, all these sorts of things. And then as you work your way through it, you work your way deeper into the processing plant and you test the next bit of kit every time you go through, you're finding out what's working, what's not, all a part of the kind of ramp up story. So I'll start with mining because they kind of broke the announcement out into mining, processing, and then we can quickly chat about the changes they made to the resource statement. But they mined 67,000 tonnes, which is down a few percent on last quarter. It's not a great number to be honest. Remember, the plant is for 800,000 tonnes per annum. So looking at the stockpiles as well, you can see the stockpiles declined by 15% over the quarter. Working in their favour, they've got much higher silver grades going through the plant than they've got in the reserve grade. So comparing numbers, about 316 grams per tonne is what they've got stockpiled at the moment versus like a bit under 200 grams per tonne in the reserve. So that will be something that they have to face up to down the track, but that's kind of where they're at the moment. And I think they're actually a bit constrained with the ROM pad at the moment. So they've got a bit over 50,000 tonnes there. Then they've got a bit of waste and, a few other bits and pieces. But if you guys can visualize and remember what Vadesh kind of looks like, it's in the mountains. It's a foresty kind of area. You're a bit space constrained. You've got construction roads needing to be built to the tailings facility, which they've only just got the permits and the agreements in place to do. So I think they might be a bit constrained on that front, although we've only got like a one-page announcement today. So it's a bit hard to actually work out what's slowing them down there. But we're 2 years into mining here pretty much now, and we're talking about 67,000 tonnes per annum. Obviously, there was previous guidance numbers that came out beginning of last year and, again, revised beginning of this year. They were revised down pretty heavily because they weren't meeting the targets there. So the numbers they've got to meet for this half year is 250 to 275,000 tonnes to be milled. As if you're just kind of assuming that you keep those stockpiles constant for this half year, you need a pretty enormous effort, 2.5 times the best half you've had to try and meet those numbers for this half year. So I think they've got their work cut out for them. But on a positive side, on the mining front, they did get the development meters up slightly on the last quarter.
It's the development meters that have been a bit of a drag because even that
the capital development meters.
Exactly. Yeah. Like that half year 250 to 275 to be milled in an 800,000 tonne per annum plant. That's still not full utilisation, which sort of signals a mining constraint, not a milling constraint, right?
I think it's both. It's mining and mill. The mill hasn't been tested yet, so what they are sort of striving for, which you can see in the numbers up there, is that they want to be running at nameplate capacity next half year. Again, it's very kind of ambiguous in the statement we've got here, but I think they're not quite kicking it out the park on both fronts. So I'll talk to the processing now. They guided to 5 million ounces, the midpoint for silver equivalent for this half year. They've done halfway through that, 1.3 million ounces. So again, a big stretch to kind of get there. The amount of tons that they milled matched this quarter what they mined, which on the mill is up 40%. So it's a big record on the milling front, but that's running at 30% of nameplate capacity right now. So backing out the grades and recoveries, you can they didn't provide the specifics here, but you can kind of work out they're in line with expectations, with expectations not being all that kind of high. They do give a couple specifics on what is causing them problems, though. They've got the tailings filtration cycle times, which are just not up to scratch at the moment, which essentially means they just can't get the water out of the tailings quick enough, which becomes the bottleneck for the whole plant.
Gotcha.
Then you've also got the road that they need to build to the new tailings storage facility, which they only just got the agreements in place for. So that, again, took longer than it was meant to take, and it's holding them up in moving stuff out. So commercial production was meant to be hit this quarter. I think in reality they got nowhere near kind of actually achieving that. So they're aiming to hit that in the quarter that we're about to approach. So
interesting that they also released the updated reserve statement concurrent with this announcement. Were there any devil in the detail with the reserves?
Yeah, I think there's some fairly consequential read through. Some were guided to already, but the first thing you notice, you open it on the first page, you can see the tons have dropped by a way bigger number than what the mining depletion was. So we're talking over 10% less tons. And then you can quickly see just to the right of that, the grades jumped up on almost all the metals they've got. So you start thinking about what have they done with the cutoff kind of mark. And you can see the NSR cutoff has nearly doubled from $68 a tonne to $130 a tonne. So the NSR cutoff being essentially the minimum value of a block that they're going to mine or would mine if it makes a sort of value, that essentially just reflects higher cost assumptions. And I think it's a pretty clear acknowledgement, like they spoke about last quarter, that operating costs are much higher than they'd previously anticipated. You know, it's not a massive surprise given the 2 years of kind of struggle we've seen. But if you look at the mine life, it just pulls it in a couple years. So 15 years of mine life still, they're not troubled on that front. But, you know, I think this might be a bit of a middle ground, and it'd be interesting to see what happens on that front and what happens when analysts start to flush through those high costs.
That's fascinating. Basically doubling the cutoff grade, but it's only results in an 11% reduction in tons after depletion, which, yeah, I suppose speaks to the pretty high grade nature of this ore body too. Yeah,
it's a solid ore body. Just the potential is there, and that's been the one thing that the people that are long the stock always fall back on. Like just look at the cash flow potential. You know, you might say, hey, it's a bit expensive given how the track record of performance has been, and the fact that the royalties might be jacked up because they're super low and all these sorts of things. But if things kind of go to plan, it's meant to print, you know, 200 million plus per annum in cash for a number of years. So that's been the fallback, and hopefully they can kind of maintain that, right?
It's the age-old thing of looking great on paper, but just going to a pretty fresh jurisdiction for mining, getting the people there to do it, throw in poor ground conditions for the capital. Like, it's just been you can tell how those things just start compounding together. And, you know, we've been talking about this since the show started, this project.
Yeah, the stock's near all-time highs.
Even
despite all of the challenges they've had.
Grade is king.
It's pretty wild, right? Like, yeah, what you guys said is exactly right. I mean, there's a lot of unanswered questions after this announcement. You know, they gave a bit more on the processing underperformance side of things than the other, but I think if anyone had any doubt about what that placement was for 2 months ago, I think it's pretty clear now. And I keep thinking back to McNulty curves and what that kind of what you can kind of infer from them in the context of this project. So I'll flash one up now and kind of talk to it so people know what we're speaking about. But essentially you've got 4 types, and type 1 is if the project, or the processing side of it specifically, gets off the ground very quickly and really hits nameplate in a pretty swift amount of time, say about a year. That's a cracking ramp up. And yeah, I mean, these guys are pretty short of that at the moment. These curves assume sufficient ore feed to the plant, right? So there are shortfalls in using this as the kind of be-all, end-all analysis, but there have definitely been problems at the processing plant side of things. And I mean, my next point's a bit open-ended. I'm keen to hear what you guys think, but I read through it, and there's the customary 2 or 3 paragraphs from the CEO, and there's no real acknowledgement of all the problems. Like, I know they've faced up to analysts on a couple of the calls, and they've answered all the questions that have been had of them. But I do find it kind of interesting, and perhaps it's just a strategy they're taking to highlight the positives and just emphasize that there's things they need to do better, and they're going to get there. But they really talked around a lot of the challenges without addressing them face up. And yeah, I mean, I'm curious if you guys have any other thoughts on that.
Maybe the marketing strategy is, well, since it's, I assume the share price all-time high is a function of zinc and silver prices being very high. So it's like we haven't hit ramp up, but that means we've just left it in the ground to mine it at high prices, which they are now. So it might actually work out better for them, because if they hit it, that was less material, more material sold at lower prices. So it's still in the ground.
Yeah. Mate, if the share price is any guide to go by, the strategy they're doing is working to a T. So I can't fault them.
Yeah. Our question marks have always just been on what the interim funding pathway looks like. You know, we sort of, I think, collectively think at some point they'll get to a period where they'll be printing great money, but it's what's the interim pathway look like to getting there? And when your share price is very high, then your cost of capital is it's not that bad. It's not like the market's punishing you if you need to bridge it with more equity or anything like that. But they also, when there might be question marks over your interim funding situation, but the ore body will kind of get there, then you're also attractive for a takeover to various parties who have, you know, better balance sheets and all that sort of stuff, in the same way we talk about kind of value, you know, those sorts of things. So one to watch out for on all fronts. Do
you think? Yeah, and these guys, surprised no one had a dig at them a bit lower?
It's hard to know.
Buying a company out in ramp up is not the most common thing you see.
Yeah.
I mean, like there's a couple more kind of points to it. Firstly, they've started repaying debt now, so they paid $20 million US a couple of days ago. That'll be a quarterly ongoing thing. And to the takeout point, it's a tightly held stock. Like 5 groups or individuals hold 50% of the company. Yeah. So
Queen's Road's one of them, isn't it?
So Helicon is 21% odd. L1 is over 15%. Then you've got Paul Cronin, the former boss, and I think T. Rowe Price and another individual up there. They make up the 50%.
Yeah, so Queen's Road's not in it anymore, are they?
They converted their convertible early, and I think the read-through was, why'd you do that? Well, they probably sold their shares.
Yeah. So, I mean, it's a super interesting one to follow, right? Like, Trav, you mentioned the capital raising, the sort of lower cost of capital that you can get away with in share prices higher, but they've done quite a few raises now. So curious to see how the support remains and how they kind of deliver it into it over the next few quarters.
Yep.
Yeah. Oh, there you go. That's bloody. We've mixed it up. Because she's gonna fire up at the end of the week, I reckon. We might have to record a Friday episode.
Gold spectacular?
Could be.
Oh, yes, indeed. And the smaller end of town.
Yeah. Oh, no, I was thinking.
We're thinking about different things.
Certain stock coming out of suspension on Friday. We might have to do a live crosser then.
Yes. No need to reveal what that one is.
So, righto.
All right, good stuff, lads.
What have we got coming up? We might have a
AusIMM, mate. That's what we've got coming up.
Oh, yeah, we do. Bloody hell. And
next week.
I cannot bloody wait. And continuing the bender on for the Gather Round conference as well. I'm going to come back a ruined man. Cannot bloody wait. And GRX as well. Don't forget that one. Once you've had fun at UGOPS, go to the GRX one in Brisbane. Discounts bloody flying out the door. In the show notes, click the links. Our great partners as well. Can't thank them enough. Mineral Mining Services, Grounded, CMV Ground Sports, CRE Insurance, K-Drill, WA Waterbores, Swick, Quattro, and Cross Boundary Energy. Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.